Hey everyone, welcome to Breakout Wednesday for Jan 29, 2020. This is the chart of the NASDAQ, which has had a small correction over the last few days due to all the coronavirus related fear coming out of China. Now we go to the All Ords. Here's a chart of the All Ords, which have had a tiny correction as well. Hasn't even made it to its 20-day moving average yet, so it really hasn't been much to write home about. Okay, individual stocks have been hit, maybe board askew. It hit, but the thing's up so much that it's really just gap back down to near its 20-day. It's not that much of a correction, but I guess some of the travel companies, Qantas, Flight Centre, maybe they've been hit a bit, but it's been more pretty mellow stuff so far. So. Now, personally, I don't give two hoots about the news coming out of China. I obviously care for anyone affected by it, but in terms of trading and investing, it's just irrelevant. The fact is, you've got your signals. I've got my signals, my buy signals, my sell signals, and that's all that matters. Some coronavirus happening in China is irrelevant to my day-to-day trading. Okay, the only thing I might do differently is my intraday, currency trading. I concentrate a bit more on yen pairs, yen crosses, because the yen tends to get, all the currencies get volatile, but the yen currency is more so maybe when you have kind of this risk-off situation. So anyway, but that's kind of off topic. So. Now, in terms of stocks, nothing changes. I don't suddenly start buying gold stocks. I think that's a bit of a loser thing to do. You're so reactionary, and usually these things are gapping up and closing on their lows, unless it's a true worldwide global catastrophe. Okay, which this is not. And so I think you hear people about, I'm going to buy gold, I'm going to buy bonds, and it's just come on, it's you don't make money doing that. When it's reactionary, okay, and so so nothing really changes. I don't start doing stupid things or breaking my rules, and a lot of people use this as an excuse to break their rules. Okay, let's just go for an example, like Shopify. So I have a really concrete plan in place for this trade. Okay, I've got. I bought the break. I got at about a third of it up at 467, and the rest I'm riding using the 50-day moving average. And there's a few things about that. One is by taking that third, it was a bit more than a third, off the table, it allows me, in banking, hearing the cash register ring a little bit, and banking some profit, it allows me the mental flexibility to sit with the remainder of that position and actually follow my rules, okay, and not be undisciplined. Because if I had my entire position on there, it would weaken me a little bit, in the sense that I'd be more exposed. Whereas I've banked some profit, I've got some kind of house money sitting there now, and it really does help me follow the rules for the remainder of that trade. Okay, now furthering on that, I had if you want to be a successful athlete, or anything in life, if you want to be a tradie, if you want to go to uni, you need coaches, and you need to learn. And with trading, we all spend so much time learning technical analysis, but many years ago I got a trading coach to help me with the mental side of things. Okay, that particular person has passed away now, unfortunately, but I worked with them for many years, and they just helped me so much. And one of the ways they've helped me is he taught me one time to just turn my P&L off. Okay, and that means is literally turn the bloody thing off. And so every trading platform out there has a way in which you can hide the profit and loss. Okay, unless you really log into the right part of it, you shouldn't be able to see it when you're looking at, you just simply log in. Okay, maybe the CompSecs out there do not have things like this, but there are ways, right? You just need to hide. You just need to not log into your account every day and stare at it, right? And so, for example, Twilio. This is the trade I've been talking about. I was long. I got rid of about half of it up when it rallied into the 200-day moving average, and I'm sitting with the rest right in the 50-day moving average. Now, I know how many shares I've got. I roughly know in my head how much I'm up. However, I don't look at the P&L every day because it would do my head in. One day it gaps up, next day it gaps down. Imagine if our house prices, the houses that we own or whatever, imagine if there was a ticker, next to your bed, and it was, the Sydney property market corrected 10-15%, from mid 2017, to 6 months ago, whenever, and imagine the money that paper money that went down then, and the thing is, people don't really care because they're not looking at the daily fluctuations, okay, and it's the same for trades. Like, there's no reason. Everyone seems to stare at their P&L, and there's no reason to. Okay, I look at my P&L at the end of every month, and that's it. I have not looked at an intraday P&L in years, and it's helped me considerably, and I think mentally I would just literally go crazy if I was logging in and looking at how much I was up or down during a trade, during the life of that trade, because I've just accepted that this thing's going to bounce all over the bloody place, right? And I just don't want to know about if this gap's up 5% tomorrow. If I look at that P&L, I'm just gonna get excited about all that money, and I'm just gonna probably do something stupid like sell it, right? But that's not the plan. Okay, the plan is to ride the 50-day moving average, and so that's just a way that helps me be disciplined. Okay, there's many other things that trading coach taught me, and if you're working hard on your trading, don't be embarrassed to have to go and get a trading coach. I mean, has anyone played cricket for Australia without having a coach? It just doesn't happen. And if you want to be I treat trading like a sport. I pretend that it is a competitive game, and I know I want to do well, and to do well, I need to have I realize I need to get a coach. I don't have one anymore, but I did for many years. Okay, anyway, moving on, enough of that. So a few other positions which would have been easy to get shaken out of. HIL, I'm out of third of that. This is one I've been talking about since early Jan. But the rest I'm just sitting and writing. Okay, and the big daddy of them all, Apple. Okay, Apple has $207 billion sitting in its bank right now. Okay, it's just gargantuan, and I'm riding this trend. You're not going to get shaken out by no coronavirus, fear mongering coming out of China. Okay, now the other thing I simply do not do when news starts coming out is start shorting stocks. Okay, it's just I'm sometimes short stocks if I get a signal, but let's just have a look. Some people saying it's time to go short. I mean, where are you going to go short? BH pretty much opens on its low, right, on that big down day, and then goes up. And so I think sometimes people say these things, and they just probably the worst thing to do is when you have a night like that Sunday night, and everyone knows there's going to be a big gap down on the Monday morning. Not Monday, Tuesday morning, right? Because it was a long weekend. Just don't. For my positions, I just wouldn't even look at them. I wouldn't even be at the screen if I was a swing trader, position trader, whatever. Because generally speaking, more often than not, they open on the lows. Okay, and then they go up. And obviously, there's exceptions to that where it opens on the highs and then goes down all day. However, more often than not, I think as a generalization, the first kind of 15 minutes of the market is where all the amateurs do stupid things like sell, and all the smart money buy. All right, and so okay, moving on. Now there are a few let's just talk about some stocks now. So RD&T was the only company I talked about last week that was setting up on the NASDAQ. Okay, this was the only trade I was looking at on the NASDAQ market, and it had this 10 tight days within this formation candle, so 10 inside bars within this formation candle here, and then it broke out and it went for it, and I trimmed about 60% of that position off at its profit target, which was here, and then the rest I'm just letting run. Okay, and so I know I talked a lot about it last week, but these inside bars in strong uptrend in stocks are wonderful signals. Okay, by far my favourite signals, bar none. Okay, alright, so a few stocks setting up. There aren't really that many. The market's had this little pullback and I'm waiting for things to base now. However, having said that, there's obviously always stocks I'm stalking. So a few I haven't talked about yet. APX, I'm stalking. It's in this sideways base. Let's just get a bigger picture of this thing. It's in a it's been a pretty good stock over the years. It has the potential to go up. Okay, it's not a perennial dogged or anything like that. And now it's basing. Okay, it's had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sideways weeks. It's had okay, and and we're starting to form a nice right hand side to this base, and so I want, if this breaks out over the next 1 or 2 days, I'm not going to be in it, but if it can just give me another 5-6 days of tight action on low volume, then my orders will be placed in that. Okay, obviously always checking that earnings aren't about to come out or anything like that, but that is starting to set up, but has a little bit of way to go. CCP Technologies Limited. Now this is a cheap bloody thing with 1.11 billion of them out there, which is not what I really want to trade much of. I just like this setup. I like all the inside bars forming inside this formation candle. I'm gonna probably trade this thing, to be honest with you. Even though I am trying to stay clear of cheap stocks, and I do not like trading things over 1 billion, but I can't argue with my inside bars like that, especially when we've got pretty much a month of them there. So I'm watching CT1. The other one, I think I maybe talked about ILU last week. Apologies if I did. I kind of forget right now. So ILU is broke down out of its base and it's come back in it. Huge day today. The market hasn't closed yet, but it's had a pretty good day so far, obviously, and so this thing might be breaking out of this base at some time soon. I like that. I like the base. It looks good on a weekly chart. Daily chart looks good. So ILU is setting up there. So that one's interesting. And now the other one that this kind of breaks my 200-day moving average rule, obviously, but once again, I do break my rules every now and then, and when I do, it tends to be when I have a stock which is very extended from its 200-day. It's potentially looking a bit oversold. I hate that word, but anyway, and we have a really tight base. Okay, and so this base here is incredibly, if we just zoom in and just get rid of all that noise, we have a pretty tight base there. Okay, it's just sideways action on low volume dry up. We had kind of climactic selling back here, and some of the other banks have been rallying. We have, like, I know Macquarie isn't really a bank, but we have Macquarie, which is at all-time highs. We've had Commonwealth Bank at all-time highs. We have some of the other banks which are looking pretty strong. I think there's enough evidence here for a decent setup in BOQ. It is a trade where I'm putting like half my normal size on. Okay, when I get stuck with these, kind of crappy companies which are in downtrends below the 200 days, I definitely don't put on full size. Okay, so it's a smaller risk, but certainly I think the probability of this being a decent trade is better than 50%, and my risk to reward is a lot better than 1-to-1. So obviously do the math on that, and over the long run, that's what trading is all about. Okay, now one quick scan before I go. Now let's just go to Davis, NASDAQ, any box, tick that, and pause my. Okay, so just pause that for a second because there's so many boxes that came up. CDLX, I put these little asterisks in whenever there's a down day in the market just to see, the market was down on Friday as well in America, obviously, and CDLX kind of had this really nice firm day here, and so it showed a lot of relative strength to the rest of the market, and is forming this Davis box all-time highs. So watching that carefully. And the other one that I'm watching is DXCM. So DXCM is a big diabetes healthcare company. Had this huge gap up here, Davis box type pattern here, break up, and it's forming a type pattern. So I'm watching that one. I'd like that to tighten for a bit longer if possible, but there are just so many good Davis setups in NASDAQ charts at the moment. So I'm not going to go through any more of them, but there are just a lot out setting up at the moment. In Australia, if you do a Davis scan at the moment, there's slim pickings. There's not that many setting up. We need another week or two for a lot of our the ASX stocks to set up into bases. Okay, take care everyone. I'll catch you next week.